One of the best budget is 2026 financial budget. Watch this video if you want to know more. There's so much talk happening from last 1.5 week or 2 weeks about potential changes in negative gearing, CGT taxes and all that. Yesterday, the budget got announced. Now we know what are the changes in negative gearing, CGT taxes, trust taxation and all that. Now, where to go from there? That is the main question. We have seen enough videos about different commentary that it is a doomsday, how things will fare. Look, at the end of the day, if the budget does get passed in the parliament, it will become a law, and then we have to work around the structure, around the tax implication which might happen to us. Negative gearing, as we all know, now we won't be able to take the loss and subtract it from our taxable income, which is our wages most of the time. With the CGT, it will be replaced from 50% discount if you hold a property for 1 year, and it will go to indexation method. How does the indexation method work? It's a bit complicated, but let's assume you keep property for 2 years, and in those 2 years the inflation was 8%, 4% in the first year, 4% in the second year, so total 8%. So you will get a discount on 8%. So you buy a property of $500,000 and you sell it for $700. Before, you would have paid tax on $100,000 because 200 was the profit divided by 2. You would have paid tax on 100,000. They will say, okay, you bought a property for 5, you're selling it for 7. The indexation method will work where if there's an inflation for 4% each year, that's 8. So that will be $40,000 on 500. So you will pay tax on 500 plus 40, subtract 700. You will pay tax on 160,000 instead of $100,000. With the trust, you have to pay the tax of 30% upfront before distribution, and then when you distribute, you will get credit and all that. It's a bit more complicated. Best to get some accountant advice. He or she will exactly tell you how will it affect. Now, where do we go from there? Politicians will try to justify the budget with some big fancy words that it will stop intergeneration wealth transfer, it will help young Australian to buy the house, it will make housing affordable. In 2 years' time, everyone will have a house. We don't have to believe them. But what we have to do, we have to work on how we can improve our financial wealth and how to navigate through this tough time or hard times and where to go from there. Now, if you are a professional property investor, have multiple properties under different structure, it can be trust, company or whatever structure, as long as you are not buying property under your name, in future, it won't really affect you because under trust and company, you cannot claim the negative gearing anyways. You hold on the loss until you sell the property and subtract it from the capital gain. It will work pretty much same under your name as well if you happen to buy the property after this announcement. If you have already property under your name before the announcement or before 12th of May, you won't be affected anyways. You will be affected for the CGT after a certain date, I think, which is 1st of July 2028. Will this budget make things more affordable? The answer is no. That's my humble opinion. I don't know. I'm not the economist. I'm a mortgage broker, an investor myself. So with this budget, rent will go up, and young Australians or everyday Australians who are struggling with the high cost of living will have to adjust high rental as well, because investors will not be able to claim the negative gearing. In next 2 years or 3 years, they will increase the rent further to compensate on the loss. So it won't really help the people for whom the budget is designed. It is more, they have done it for whatever reason, they know more than us. But then where to go from there? I think if you are a serious property investor and bought property using the data, I think you will still be fine, because the next 1 or 2 properties or 3 properties, whatever you are looking to buy, if you will using data, you will still make decent money. So gone are the days where you will just pick up a property. Anyone who bought a property in Perth in 2021 have made money. That type of scenario might not happening that often. And the reason being, now it is more critical and more important to buy property using data. If you are buying property in the strong owner-occupied suburb where there's a high demand for owner-occupiers, in next 5 years, if you happen to sell the property, owner-occupier will buy the property from you, most probably. You will still make money, but let's say you buy a property which is not dominated by owner-occupiers but by investors. There you might not be able to make that much money as compared to what you would have made money where the property is bought in a suburb which is high owner occupied property. It is very important to calm down. Everything you are looking to grow your wealth will come down how do you structure your property. In my previous videos as well, I always talk about that buying property is the easy part, but how do you buy a property? What structure you buy the property? Which lender you place your structure 1, structure 2, structure 3, and how do you progressively put the structure with different bank will decide how quickly you can grow your property well. With these current changes and the stress in the market, as a property investor, if you are serious, you might be able to buy a property at a discounted price for long term. If you are looking to flip a property in 1 or 2 years, probably not the best idea. You might lose money because from my opinion, I don't think the property prices will go up. But if you are an investor looking to grow your property portfolio and want to hold a property for 5 years, 10 years, 15 years, and maybe beyond that, then property is always the asset which is the safest asset traditionally, and it will remain so. There will be changes in future. There were changes in the past as well. Change is something which is constant. We have to adopt how we want to do it. As an investor, my humble advice would be make sure you're buying the property under the right structure that's gonna benefit you for the long term. With these changes, one thing is for sure, if you are just looking to buy a property under your name, which is highly negative geared, that strategy won't work. And that strategy itself, a lot of loopholes. Because if you're buying a property for which you are paying $30,000 a year from pocket as a loss, how long can you sustain it? Unless you are a high income earner, maybe earning $1 million, $500,000, $400,000, then it might make sense for you. But otherwise, for everyday investor, that won't be a great idea anyways. Moving forward, there are few things. Structure is the key if you want to grow your property portfolio. Second thing, positive gear property if you want to grow your property portfolio quickly. In that way, because your cash flow will be intact and the repayments will come as the property is positive gear. And the third thing will be buying a property using data. Data will play the critical role. All the suburbs which are strong, which are strong due to their fundamental, due to the population growth, due to the schools, due to the infrastructure development happening, will remain same. So the suburbs won't go from great to worse just because of the tax changes. Make sure you are using data. Make sure you are buying under the right structure and buying a positive gear property. If it take instead of 2 months to buy a property, now 6, 7, 8, 9 months, let it be. Don't buy the property just because for the heck of it. Don't buy the property because you want to show that you have got XYZ property. The number of property might be great for your ego boost, but it won't really build your wealth. Buying a wrong property will put you in hardship. If you out there looking to get advice, want to see that how does the budget affect you in respect to how you can grow your property portfolio, need some advice that what changes need to be done now so that you can comfortably grow the property portfolio further, give me a call on 0447 95 9546 or email me at info@apwfinance.com.